Today's episode is brought to you by Kraken Pro. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
What's up, Jonah?
Hey, Avi. How you doing?
On? I'm good. I'm really good today because the markets are really good today, and that it always lifts your mood, right? When you see a smattering of green as opposed to the bloodbath of red.
Yeah, I got a little scared last night. I'm not gonna lie. I'm normally pretty even keel, but I started to panic a little bit. Not enough to sell, but just like, oh man, how bad is December gonna be? How much volatility am I gonna have to ride? How stupid am I gonna feel not selling now after it goes down another 20%? I could have bought there, but yeah, I didn't sell.
I mean, basically, the thing that made me really happy, to be completely honest, is that by the end of the day, by like Monday evening, we had retraced from that 84,000 level. Like we had bounced off of it, and now when you look at the charts, I mean, things look really good. And why do I say this? Just as a trader, generally you tend to bottom when the selling stops, not when the buying begins. And it looks like, at least now, especially if we can hold this level here, you sort of got the last bit of panic sellers out of the market. Like if you go to a daily chart and you look at the volume, on Friday, 21st of November, you had a massive volume spike. That's when we got down to 80K. And then this more recent sell-off is, I think, just the last stragglers. So this is like generally a classic bottoming pattern where you get the major sell-off, you get the huge capitulatory moment, and then when we recorded, I think we recorded around 87K BTC, and we were saying, I think this is the beginning of the end. This is where we're bottoming. But what tends to happen is like when price rebounds to the previous level where a lot of people bought, and that previous level where a lot of people bought was that 92 to 93 level. You can see it on the daily chart, that little hammer for those following along at home on Tuesday, 18th of November. That's what you call a demand zone. We blew right through that, which means that there were a lot of people that probably averaged in around 92 to 93. And then once price got back there after trading 80, people start offloading. They're like, okay, I'm back at break even. Let me get off. And then you get that like slow, low volume retracement, which is just straight profit taking. But profit taking selling is a lot better and less scary than all of the de-risking and getting out of the market selling that we've been seeing since the top. I mean, basically, I think that started around 100K. Like once 100K broke, people got very, very panicked, and a lot of that were people throwing up their hands and going, "Okay, let me get the fuck out of this market." That I think what we recently saw is just people that got caught in bad positions at 92 to 93, sort of puking the last of it, and then you hit a massive demand zone, and Bitcoin goes up 5%, and we don't make a new low, and that's really the key. Is not making a new low, because that sets up traders really well to buy with an easy stop out. The stop out being now 84, right? So if you're a trader, you look for triggers in the chart. You look for good risk reward, and now there's a really nice trade here where you can buy 90, 91. You can look for all the way back to 100K if you want as a short-term trader. That's a nice 10% move, and you can stop out. You can stop out 8% lower at 84. So it's like slightly better risk reward than before, where you're like, I have no idea where this freight train is going to stop, so I'm obviously not going to get in front of it. Does that all make sense?
Yeah, no, it all makes sense. You brought up a lot of interesting points that I was kind of looking through on the charts while you were talking. I mean, I think the big thing that happened, yeah, I love your phrasing of how like the bear market stops when the selling is exhausted, not when like white knight buyers just step in to save us all. There's a lot of fear and doubt out there, particularly around strategy, Sailor and co. But the selling, let's talk about the selling that stopped, because that I think is the most relevant thing to your point. Funding flipped negative right around Thanksgiving for Bitcoin, or it went from being like solidly positive to wrapped around zero, negative on some exchanges. And then the OG whale selling that we've talked about being kind of like the main driver of Bitcoin's depreciation. We said it was going to slow down below 100K. It turns out it slowed down below 90-ish K. And the way that you would track that, you know, if you don't have, like, Glassnode has a metric for whale wallets and their transfers to and from exchanges. I don't subscribe to Glassnode because I'm lazy and cheap, but everybody should. Basically, the way around that is you just go into, you know, Grok, which is useful because it's connected to Twitter, and ask about OG whale selling and prompt it with basically the chart that from Glassnode and ask if it's slowed. And based on tweets, it sort of stitched together a thesis that the OG selling has indeed slowed below 90K. And it cites a bunch of different tweets from people who do subscribe to Glassnode talking about how basically those whale wallets stopped transferring coin to exchanges. And now it seems like over the weekend, they actually accumulated whale wallets rather than sold. So I think we're right. I think like basically there's going to be a wall of selling, maybe above 100K. Maybe the OGs have more to go, but that's finite, right? And that supply is getting gobbled up. It seems like equilibrium price 90K, buy with both hands price, where like your mom, your friend who's a no coiner, the guy who laughed at you in 2021 but now gets it, like your buddy's buddy, they're all calling you asking if they should buy in the 80s. I think, you know, I think we go right back up to 100K. But it's going to be a super choppy December because you usually don't get a lot of risk commitments from institutions in December, as we've talked about. It's more of like a retail market or a market that's being driven by CTAs and not much else. So I think it's just going to be like a super choppy December. You're supposed to buy below 90K. You're probably supposed to do nothing if it's above 95K or 100K. And then I bet we get big inflows on the, you know, during the first couple of weeks of January. And one last thing that's happening that's kind of crazy, Avi, I wanted to talk to you about this. Have you been looking at the Fed chair appointment on Polymarket? Something huge.
No, tell me about it.
So basically, Donald Trump, so Jerome Powell's term is up on May 26th. And one second, let me just pull up the Polymarket so I can share the screen here. So Trump announced that he has selected a new Fed chair. Like he said, the decision is made. And so I just, you know, looking at Polymarket here, as soon as he announced that, this Kevin Hassett guy, you know, the previous most probable outcome was no announcement by December 31st. But then as soon as he basically said he's made his decision, the probability of that dropped down to 20%, and it's Kevin Hassett guy goes up to 70%. So we all know that the Trump administration, you know, love him. He's a big, snuggly, orange crazy character. But he's, you know, his administration's a little bit corrupt. We know everybody's like trading on Polymarket when they hear stuff that the market doesn't know. Polymarket basically tells you what's going to happen. And, you know, the grifters in the administration are taking retail money. So Kevin Hassett's going to be the next Fed chair, it seems. I bet Trump makes that announcement this week. And you Google Kevin Hassett. I'm going to do that in the same Chrome tab so that we can keep sharing our screen. Kevin Hassett crypto. Kevin Hassett, he owns like $1 to $5 million worth of Coinbase stock. He worked on the company's advisory council as a paid advisor there. Previous crypto experience, he worked for One River Digital Asset Management. We don't need
Wow.
to the point here.
This guy really likes crypto, huh?
Dude, he is short of like, he is an economist. So on paper, at least, he is qualified for the job of Fed chair.
Right.
Unless Trump had, like, he's cartoonishly, stupidly dovish, cartoonishly, retardedly bullish crypto. He's basically the Mr. Pump Your Bags. Like, this guy should literally be on the cover of the 2026 edition of Monopoly. This is Trump's way of, like, wink, wink, nudge, nudge, telling the market, your bags are going to the moon next year. I'm not going to have a bear market in the middle of the midterm elections. Like, buy now, wink, wink, nudge, nudge, because this guy is going to send everything. And also, just having him as a shadow Fed chair, like, okay, Jerome doesn't leave until May, but if this guy gets announced in December, it puts pressure on Jerome. The only thing that could possibly be more bullish for crypto and for risk assets than this guy would be if Trump had appointed like Don Jr. or some other ridiculously unqualified acolyte.
But here's a question for you. And by the way, as we're talking markets continue to rip. God, I love it. I love it when the bears come out in force and then they just get smacked in the face. So many people on that last candle there were saying, people that called the bottom, you guys are dumb. But
quick sidebar. Have you ever, speaking of bears getting daddied, have you ever seen a picture of a bear without hair?
I have never seen. No.
Check this out. How terrifying is that?
What the fuck is that? Jonah, why are you looking this up?
I don't know. I saw it on X and I was just like, that's the scariest thing I've ever seen in my life. They look like alien space predators.
I mean, that's what all the bears are going to look like in about 2 weeks. They're going to be so stressed they're going to lose all their hair.
Sorry, I thought it was like a funny segue. Anyway, go on. So yeah, you love it when the bears.
That was good, Jonah.
Yeah, I
like that.
Old man got jokes.
Old man really likes hairless bears. On the last podcast, what were we talking about? We were talking about survival tactics. On this podcast, we're talking about hairless bears. Now, hairless chimpanzees are a whole nother story. There's like a whole meme with Joe Rogan about that a long time ago. I don't know if you remember that.
No, I don't.
Where like on every single podcast, Joe Rogan would bring up hairless chimpanzees.
Joe Rogan.
He'd be like, they're jacked, man. They're totally jacked. Yeah, he's a crazy guy.
Yeah.
But before we got
just completely threw you off topic.
Sidetracked.
You were saying that you love it.
The
chart's rallying. You love when bears get destroyed.
I love when bears get destroyed. So for people that
we're talking about the Fed too,
are curious here, this is sort of what I've been looking at. So this is the Bitcoin chart. And when I tell you guys that volume, that volume really is everything. Okay, so two things that I think are important to note. From top to bottom on the previous pullback, about 32%. From top to bottom on this pullback, 35%. Not a huge difference. But I think basically, like, once Bitcoin, and then look at the previous pullback, about 33%, right? And this has been going on now for more than a year. This type of pullback. I mean, you can even go back over here. You look at that. Okay, that one's a little bit less at 18. This one is 20, but that's sort of in an uptrend. Whenever you get these periods of consolidation over here, Bitcoin tends to pull back about 30% consistently. And I think that's just because of the type of market participant that exists in the Bitcoin market now. These are slower moving, large ticket investors that are willing to be patient and wait for good entries. And it seems like 30% off the high is the good entry for Bitcoin. That's when the risk reward starts to look good. And I think specifically it starts to look good because if you look at it the other way, 30% down is about 50% up. And I think like 50% back to all-time highs that's a good trade. Like if I buy it here, I can get 50% on my money, and I can, I'll cut if it goes down another 20%, because then we're probably in like full on bear market territory. So
Yes.
that's why I think that 30% has been sort of respected over the last 3 major pullbacks. Is it represents the best risk reward for the type of investor that is now candidly driving the price of Bitcoin. Like your apes like me and you trading on Hyperliquid or buying in a Robinhood account or pushing through buys on Coinbase. Like we're not driving the price as much as your big boys allocating, like, the Texas pension and whatnot. And I don't know if you just recently saw the news, but Vanguard's actually allowing crypto now. So
I saw Bank of America
So-
just allowed their RIAs to recommend up to 4% of the portfolio in IBIT.
Yeah, which is huge. And so then you combine this. I want to combine this with 2 other things. One is when you get a ridiculously high volume candle like this, and that high volume candle coincides with being 30% off the highs, that's generally a good sign for bottoming. But this is like very
wait, sorry. I want to make sure I understand this.
Yeah.
So you get the 30% sell off, then what's the signal you look at for bottoming?
Look at this volume. Look at this candle. You see down here. Here, I'll make it a little bit more clear for those. This is what I'm looking at right here.
Oh, okay.
You see that massive volume spike right here?
Yeah. Like
That
basically, for those who are
happening-
listening on audio, in the midst of the sell-off down to when they wick down to $80,000 BTC, there was gargantuan volume, like let's call it 3x or 4x an average daily volume bar. That basically tells you
and you can
the
say,
sellers are
well,
tapped
it
out.
happened here on October 10th, but this was not 30% down. That was you were not 30% off the highs, which again,
October 10th was a weird one also. That was
a weird one. That was a lot of like forced liquidations, and this was liquidations, but it was a lot of spot selling. And that's actually what you need to look for, is not derivative. Like liquidating derivatives is kind of the first step, like liquidating your apes. That's the first thing that happens. And then the last thing that happens is you liquidate panic spot buyers. And then you get this sell-off over here. Let me just switch back. I'll get rid of this to clean it up for you guys. And then you get this sell-off over here yesterday. And what this is this is a low volume sell-off. This over here, this is the demand zone that I was talking about. That's where a lot of people bought. And so when price got back up to that level, generally the bottoming pattern is you sell off hard, you bounce back to where the prior demand zone was, you sell off a little bit, and then you go back up. And that little bump there, and you probably get a few of those, like you'll probably get that at 100K again, like you'll get up to 100K, maybe you'll come back down, and then you'll go back up, because basically what you're doing is you're getting out all of the people that got in at that bad price, saw their position decrease, and now they're back at break even. And break even is a very psychologically powerful thing. And so then what you get is you get that profit taking. But basically, I guess the whole point here is that I think this is a pretty clear bottoming pattern, in which over the next month to 2 months, I would expect Bitcoin to break up above 100K again, get back up to maybe, like, honestly, we could go to all-time highs. I think that might take 2 months, but this to me smells a lot like a bottom. And once we start going back up again, you kind of got to get in, because once we start going back up, it's just going to look even worse. I mean, Solana is another great example of this, right? Like you retest that 126 level, you bounce off of it. Now people know, oh fuck, I can't believe I didn't buy that 126 level again. Solana's probably going to do very well too. God, I love this chart, Robinhood. You get this.
Holy.
It's beautiful, right? And this is, I bought here around like 112, 113 is when I said I was buying, and people clowned me, but I'm up 14%, so I'll take it.
You know what else is gonna the other thing that looks like it's bottomed that I want to buy here, that I think I'm going to start click buying during this podcast, is Galaxy.
Galaxy.
GLXY. You ain't got no alibi, you Galaxy.
Let's take a look at Galaxy. Let's see what we got.
Yeah, what do you think of that chart? Basically, you know how I feel about crypto. And crypto related things and speculative things. I don't like catching falling knives. I love buying after they bottomed. And I'm not a big technical analysis guru or short-term trader, but what you said really resonates. Like when you get huge volume wicks on, as this thing is tanking, it usually means that the sellers are tapped out, and the sellers being tapped out is usually the best bottom signal there is. The sellers are exhausted. It happened after FTX. Mm-hmm. It's a little mini version of it is happening now. I don't know. Let's talk about, like, Robinhood is just a rocket ship. That thing is going to be up only for decades.
And Robinhood is a secular bet.
Yeah, it's a secular.
So that's basically
that's the best way to bet on the boomers transferring wealth to younger generations who want to trade it.
No questions asked.
That and Bitcoin, basically.
So like when you see something like this again, Robinhood really collapsed from the highs yet again. Look at that, 33%. What a magic number. If there's one thing that you take away from this podcast, is that 33% for these assets seem to be a magic number. A lot more for things like Solana, because I think the makeup of the people that buy Solana, it's like
Solana's off a lot more than 30% though. Holy moly.
But that's what I'm saying. It's off more because it's a much more speculative asset. Obviously, Bitcoin is extremely speculative, but Solana's next level speculative.
So what do you think of Galaxy and MicroStrategy?
I think Galaxy's looking pretty good here.
I think Galaxy's looking good here. That's a place to deploy some skrill. And then MicroStrategy, a lot of talk about how they're underwater. Basically, they're now, just to summarize, their market cap is below the value of their Bitcoin holdings. If you subtract, even if you subtract out the debt from the value of the Bitcoin holdings, so they hold, I don't know how many billions of Bitcoin minus, I think it's like $9 or $10 billion worth of debt.
55 billion of Bitcoin minus, or I guess more now, because I think that was quoted at a lower
minus
price,
like 9 or 10 worth of debt. That gets you to, I think that's still, that Bitcoin minus debt is still above their market cap. And you have the huge volume bar there on the lows with all of the FUD. Basically what I think, don't kill me for saying this, Avi. I think for the very first time in my life, I actually want to buy MicroStrategy. Is it going to get worse or better from here? Like basically, if MicroStrategy blows up and force sells Bitcoin, the whole market's going down to 50K. BTC is. But if they don't, we always talk about how the second derivative of the news is more important than like the current state of the news. Are things going to get worse or better for MicroStrategy's narrative? Like it feels like it's hard for things to get worse unless they start basically getting liquidated.
Well, here's the thing. I get nervous about MicroStrategy because I think the DAT game is over. I think that era of retail piling into these effectively holding vehicles is over, especially as now it's so much easier for your average person to access crypto. And I also think that once the Overton window shifts, once people start talking about, MSTR is going to have to service their debt, they came out and they said they could sell Bitcoin derivatives. That I think is a lot of what spooked the market and got people very, very nervous, and what caused that little, secondary sell-off on BTC. When I go look at the MSTR chart, I don't see it from a technical analysis standpoint. I don't see it from a fundamental analysis standpoint. I don't really see it from any standpoint as to like why I would buy this thing, other than for like maybe you get a quick 30% bounce, because it got sold off so hard. But I'm not a buyer here with my eyes closed. I'm a buyer. I personally wouldn't take this trade. I think that there are just better trades out there. So for example, I think Hype is a phenomenal trade right now. I think that it actually held up remarkably well for an altcoin during this most recent sell-off. I think that it was sort of tamped down by all the fears of the supply side coming out from the team vesting. I think that those fears are massively overrated, and also hype continues to print money like nobody's business. And so when I look at hype, like on a weekly chart, I mean, when you look at Bitcoin on a weekly chart, you see it kind of, you had this 4 weeks of just straight down, and then this huge buy up in you see the demand zone. When you go to hype, you kind of see that this 32 level, this 29 to 31 level, people just can't get enough of hype below here. Like it just keeps getting bought up. And you would expect for an asset that has a lot of supply coming online, you would expect for that level breaking to cause panic, but it hasn't. And so I think what you see is you probably are looking at $50 hype in the next, call it 6 weeks. That would be my guess. I just don't see it with MicroStrategy, because I think that the story for MicroStrategy has been attacked too much over the last few weeks. And so it's much harder to make the case for MicroStrategy.
Yeah, fair enough. The case for MicroStrategy is it trades below NAV. It trades below NAV minus debt. So unless they blow up, it's like basically GBTC. And if you're bullish BTC, it's levered BTC. But it'll probably never go above NAV anyway. So basically, it's kind of like
the issue is obviously dilution. Like if Sailor knows now that, just follow, like, I don't know this for a fact, I'm just following a logical sequence of events. They said that they might sell Bitcoin derivatives if they need to service the debt. Sailor knows that would be an absolute death knell for his business model. And so the only way that he can stay alive is when MicroStrategy rebounds, sell as much stock as he possibly can. And so I don't like I don't like fighting that mentality, where I know that what he needs to do in order to be successful is to sell stock. And so why would I own something that needs to be diluted in order to exist?
Okay, you just talked me out of MicroStrategy. Fuck that shit. Okay.
Knowing my luck now, it's going to rip like 50%. But I mean, but at least like there are so many good trades in this market right now. I just don't see why.
You know what trade I think everybody's sleeping on, and I'm getting more and more pilled on this trade every week. I know it's an embarrassing trade. It's a stupid trade, but I think it's a 5-bagger. What
is it?
Aster. So can I share my screen?
Go ahead. I'll stop sharing mine.
So I welcome everybody to basically double check these stats. Aster has been live for 75 days. Today's metrics. On perps, Aster it's 100%, 110% of hyperliquid, meaning that, so 10.3 billion on Aster volumes versus 9.3 billion on hyperliquid. Spot, it's 38% of hyperliquid. Fees, Aster generates the exact same fees as hyperliquid, 1.9 mil a day on both. OI, Aster is 46% of hyperliquid, 2.5 billion of OI on Aster versus 5.5 billion on hyperliquid. And their buyback, it oscillates between 60 and 90% of hyperliquid. So 1.15 versus 1.7 million. So hype is valued 4.5x as much as Aster. So to flip hyperliquid and market cap, or maybe circulating supply, for I don't know which this guy's using, that's $4.20 Aster. Right now Aster's trading $1.01. So you're on mute.
Thanks. What I'll say is I'm a hater. Like I'm a hater of this asset. Mostly because I think that it's fake. Like I think that all of the data that you're spewing is probably fake.
Wasn't
that
all of
being-
Binance data fake until it wasn't? Aren't Trump and CZ, not Trump, but like the World Liberty Financial crony squad, aren't they in bed with CZ? To me, it feels like one of those things that will be faked until it is made, and then it will all be real. So to me, this is a great bet on crime and corruption, and I like those bets.
And that is exactly where I was going, which is I'm probably mid curving it, and I was going to provide two sources of bullishness for your thesis, despite me thinking that this thing is a complete scam and utterly fake. Is that it looks really good on a weekly chart, it's like refusing to go down too much. Since November 1st, it hasn't broken below 90 cents, and it just continues to, like, clearly nobody's selling this thing.
Well, CZ controls 95% of the supply.
The question is, why is nobody selling this thing? What plans do they have for it? Like, why wouldn't you? Okay, so if you go and you look at the market cap of this thing, it's what, 9 billion fully diluted, 2 billion, 2 billion outstanding. If you own a substantial amount of the supply of this thing, and the market is going down a lot, it's a great time to sell. Like, that's not, that's not so bad. Like, why not cash out? Like, why not just take it and say, hey, I'm no. And that nobody's sold it. So I do think that there's potential here. Like, they might be doing it. They might be holding on to it for a reason, and that's if they think that this thing could be a sure bet. And the other thing that I was going to bring up is that you're right. Binance, in the beginning, everyone looked at Binance and everybody said, oh, this thing is just wash trading. Oh, it's Chinese scammery. Oh, it's this. Oh, it's that. And guess what? It won.
Yeah.
Apparently I glitched out. It's because you know what it was. It was Aster. Aster fucking DDoS'd me for talking shit.
Aster glitched out your computer. It's funny. Like,
it glitched me out. My God.
Maybe we should just roll the ad here so your PC can recover. Feel free to reboot it or something while they.
Yeah, I'm gonna let me fire up the VPN, guys. Protect myself.
If you're an eligible US trader looking for an edge, Kraken Pro is the only crypto exchange offering margin trading in the US. Qualified traders can tap into 150 plus margin markets with up to 10 times leverage on select assets, using Bitcoin, Ethereum, USTD, and more as collateral. Plus, you get real-time risk tools and Kraken's signature deep liquidity all in one trusted platform. Check out Kraken Pro and see if you qualify at kraken.com/features/margin trading. Crypto trading involves risk of loss, and margin is not for everyone. Margin services are offered to U.S. customers through Payward Interactive, Inc. For full disclosures, visit kraken.com/legal/disclosures and review Kraken's margin disclosure statement. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peak, the machine economy computer. Head to peak.xyz to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yes.
We're back. We're back.
And none of what we're saying will ever be financial advice. If you ever follow our advice, it is highly likely that you end up with no money, because Jonah and I have no money. And so therefore it's a bad bet most of the time.
You're screwed.
So don't follow us into the abyss.
But back to what we were talking about.
Yeah, go ahead.
Aster, you know, in terms of like things that aren't financial advice, I'm not interested in Aster because I think that the data is real. I'm not interested in Aster because I think that, like, I you know, obviously I live in the US. I would never use Hyperliquid, but from what I've heard, the Aster user experience is like super terrible relative to Hyperliquid. Not super terrible, just a little bit worse, right? I'm
sorry, that guy just made me laugh a lot.
Yeah, there's a guy in the comments that said, "We know you have no money. That's why you run ads." Yeah, basically, yeah, I'm not interested in Aster because I think that it's going to legitimately, via its superior product or use case, take over the entire market for crypto liquidity. It's not even really decentralized. It's basically a centralized exchange with a Web3 login, right? And none of like, it's not going to win by fighting fair. It's going to win because I think CZ is in with the right people. CZ knows how to bootstrap an exchange. CZ controls 95% of the supply. So like when the price goes down a little too much, he's like, hey, to either him or one of his acolytes tweets out like, sorry, it's been such a volatile time for the Aster community. We're going to make the price go up now. And then it like rallies 30%. Like something fishy is going on here. I think they're gunning for Hyperliquid. I think that you could easily see, you know, whatever the FTV of Aster isn't real FTV because CZ controls so much of it. I could easily see it flipping Hyperliquid in terms of like circulating supply to circulating supply. Again, nothing against Hyperliquid, which is obviously a superior product. It's more decentralized. It's more just like, these are CZ put FTX out of business. CZ put Binance in business. CZ is in with the World Liberty financial guys, and they can certainly send Aster via some regulatory backdoor upwards. It just feels like a nice levered bet on the DEX space, which should come roaring back with crypto. Basically, I think it'll be the fastest horse in the revenue meta that we're in as Bitcoin recovers. So I kind of like having a little bit of Aster just in the back pocket. I'm long some Aster perps with 2x leverage on Aster. Did a little farming. Nothing crazy. I kind of like. I think it might be a good 5-bagger if in a best case scenario.
Yeah, I think that's fair. The other angle is that they can both grow in parallel in the sense that both Coinbase and Binance won because they were actually going after a different subset of trader, right? Coinbase going after the American, more retail, which I think is what Hype is doing. It's going after more your European-based traders, your American-based traders, and Aster could go at, it can easily go after your Chinese, Japanese, that sort of section of the world.
It's a no KYC traders, capital control evasion portal, right?
And so I think that there is obviously benefit I don't think a ton of those people are trading on Hyperliquid right now. I think Hyperliquid is very Western focused, and you can have obviously an Eastern focused one. So I think that's fair. I do think in terms of the DEX space, there's just so many different DEXs coming out. This guy, actually, this person here has a good comment. There are a ton of new DEXs coming out. Everyone's really excited for Lighter as well. I don't think that the Lighter guy has a lot of riz. I don't know if you've seen him on Twitter. He's he ain't no Jeff. I'll tell you that. He's a little weirdo, but he's really, really damn smart. So you weigh the two. You want a charismatic, riz-filled leader, or you want somebody that's like, Albert Einstein when it comes to HFT trading.
In the era of
let's see who wins. It's like the classic Chad versus nerd debate.
In the era of AI, everyone is smart. So all that's left is riz. That's the only thing we humans have.
It's a good point. It's a good point, but I think there's something to be said about like the deep set autism of like being an HFT guy at Citadel.
Yeah, no, I'm only half kidding. Basically, what I think, honestly, this is my real opinion and sort of how I'm trying to educate my kids. I think that the value of being in the top 1% of intelligence is going to skyrocket in the new world. Like, I think that if you're Jeff from Hyperliquid smart, if you're Citadel HFT smart, the value of that is it's already so valuable, and it's only going to multiply in value from here. For the rest of us who are in the 99th percentile and below instead of the 100th percentile, I think that intelligence is basically going to be commoditized, and it's all about like charisma and sales skills and maybe morals and ethics and just knowing right from wrong and how to reason between the output of these AIs and just to interpret them properly is going to be important, unless you're obviously Jeff level super genius. But that's
I think you're 100% right on that. And one thing that you turned me on to this last episode. Google Gemini is out of control good.
So good.
It's out of control good, and it's like it's my new portal to the internet. In the same way that ChatGPT like took away my desire to Google things, Gemini has taken away my desire to use ChatGPT just because it's a lot better. And it's like it's a nicer user experience too. There's something about like the design language of Gemini that I really like, and that is ridiculously bullish for the markets. Because think about this, everyone's freaking out because OpenAI is signing these huge contracts, but they're losing money hand over fist. If OpenAI goes down and goes to zero, then that only matters if they're the only game in town. If they go to zero because Gemini is just better than them and ends up taking up all the contracts and ends up making an existing business more profitable. I mean, Google has the infrastructure to make AI profitable. OpenAI seemingly doesn't have the infrastructure to make AI profitable. But it kind of tells you that the people are getting it wrong when everyone's running around saying, oh, AI is not making any money. It's just a bunch of hype and glorified BS. That's just because everyone's been focusing on ChatGPT not making money. There are plenty of companies out there that, because they're using AI, are going to make a lot more money. Google as one of them, which is why I was so bullish on Google. And I bought some in that tweet that I sent out. Honestly, I might need to buy more because it sort of lagged the market a bit over the last few days. But yeah, I'm super bullish on the rest of the year. First of all, like you said, new Fed chair coming in is not only good for crypto, it's good for cutting rates. It's good for what Trump wants to do. Trump wants to supercharge this market. Trump wants to send this thing to all-time highs and far beyond. And he really cares about it. And screw what happens down the line. Forget if inflation comes back on the back end. He's out by that time, most likely. If he supercharges the market for the next 3 years and just sends it up in a straight line, and then inflation comes on 4 years later, he doesn't care. Like, he's not going to care. And so I do think that there's tremendous incentive for him to basically just push this thing higher. And so when you combine, incentive from Trump to push this thing higher, you combine it with, I do think AI will make money for the right companies, and therefore the fears of the AI bubble and growth are overblown, because I think that it will continue to grow. When you combine those two things, you basically, like, I have no fear for the equity market. I have no fear. I'm still 95% invested. Now it's just about figuring out like how, like, do I get levered into this? Because I'm very bullish on the overall equity markets. And I was nervous about crypto just because it had decoupled so hard from the rest of the market. But I think now I see why it did that. I think that it was just the late sellers getting out. Until today, I wasn't necessarily sure whether it was just continuing spot selling or profit takers, or whether we had hit a demand zone. I think once we rebounded to 88, it became very clear that, and even here, I mean, you can wait a little bit. Maybe you want to wait to buy at 91. Maybe you want to wait to buy at 90. Maybe there's a little bit of a pullback here, but I think that this is a great trade here personally.
Yeah, I think so too. I mean, just talking about OpenAI versus Gemini for a second. Gemini's better. Nano Banana Pro is incredible. I, uploaded 3 pictures of my kids and got back. I told it to advance them into their 20s. Got a hilarious and incredible photorealistic family photo of my kids in their 20s, which is just insane, just insane levels of output coming out of this thing. The answers are better than ChatGPT. So like ChatGPT is worth about $1 trillion.
Mm-hmm.
Imagine if but like that company's privately held, right? It's basically Thrive and a few other VCs and a collective of like angels that hold that stock. Imagine if that $1 trillion market cap goes to 0 and Google gets that $1 trillion of market cap.
That would be absolutely phenomenal.
That's basically a wealth transfer from Thrive Capital to Jonah and Avi, because we hold SPY and Goog, right? Another, and all of you listeners, I think another thing, Google uses its own infrastructure. It uses TPUs. It doesn't use NVIDIA GPUs. So there is a little bit of concern that I have where the self-licking ice cream cone of like OpenAI committing to spend whatever some ridiculous number on NVIDIA GPUs and NVIDIA committing to like supply Microsoft. I forget how the love triangle works there, but it's all a bit recursive and kind of, it's a bit reminiscent of the DATs in crypto. Like that could certainly take some market cap out of NVIDIA, but that market cap would get transferred over to Google because, it's their product, the TPU, that's driving all of this. So basically, I think this is a war between Google, NVIDIA, and OpenAI. And if Google absorbs all of this, their search business is going to multiply as well. I still think Meta has the most room to run and the most value to extract from AI out of everybody, but I don't think the stock market realizes it yet. So for now, I'm basically what I think is there's a huge technological revolution going on here, and it's akin to what shale was for oil or the internet was for some internet stocks in the late 1990s. There's no reason to be bearish the macroeconomy right now, like on the basis of a trad crisis. You're not going to have a credit crisis. You're not going to have crazy unemployment as a result of some collapse, unless unless Kim Jong-un nukes Tokyo, but like that's not going to happen. So you have to underwrite like a war not happening.
Really
no
new
Ukraine.
I've never been to Tokyo. I really want to go.
It's friggin' awesome. Great sushi. Wonderful people. Very polite. You could eat your breakfast off a toilet in the subway. It's that clean. But basically,
I don't think I will, but I will think
you shouldn't, but you could. And that's how clean it is. Not like New York City where you live, Avi. Basically, I think
Stop doxing my location, Jonah. Why are you telling everyone where I live?
Sorry. You lived in New York City. I actually have no idea where you are now. Your background.
I thought, by the way, just as like a total tangent side note, I thought it was really funny when the entire internet exploded over X adding location data to people, and like there were a lot of crypto people that were like, "Oh my god, I can't believe they doxed that I lived in the United States of America. Now I'm definitely going to get attacked by a wrench." I'm like, "You're not that."
No,
that's just not how that works. But that's okay.
It's not.
Oh man, the amount of people from India, huh? Crazy.
A lot of Indians. Funny how many Indians there are. We learned
a lot of Indians out there. I'm proud. I'm proud of my other half. Let's go India.
Go India. Anyway, where I was going with this whole rant was, I'm underwriting the probability of a trad crisis. I don't think that's going to happen. I do think we get a mini crisis as this technology boom kind of, excuse me, as this technology boom reallocates wealth and creates new winners and losers. I think that it's kind of that's what scares me. That's the only risk I see for Bitcoin and for stocks, is that AI basically destroys value for some subsector of the economy fast enough that those people create either a social revolution or some sort of broader contagion. In either case, I don't think that any of this is short-term risk. I think we're in the clear until late 2026, early 2027 at the absolute earliest. And just what to keep an eye out for, like obviously we've talked 100 times on the pod about social redistributionists being bearish markets. So let's not beat that dead horse. That's obviously something everybody understands if they listen to this. The thing that I would look out for that could create a problem is like, let's take two analogies. Let's look at tech stocks in 1999, 2000, and crude oil prices in 2013 through 15. So in each case, there was a technological revolution, which was the internet in the late 90s and horizontal drilling, aka shale drilling, in the 2010s. And leading up to those, in the tech, when the internet was created, you had this euphoria, kind of a crypto 2021 moment where pets.com and everything else was just going up on pure speculation. Then reality set in, and that crashed the stock market, the tech stock market, for a little while. In 2000, basically, you had sort of an equivalent phenomenon, which was peak supply in the crude oil market, where everybody thought, I'm getting somewhere with this, Avi. Don't worry, this rant is going somewhere. I believe
you. I'm listening. I'm with it.
So basically, you had peak supply, which was this big. It was basically like this theory that you could only get a certain amount of oil out of the earth, and the human race would keep growing and exhaust the supply, and then you'd have like crazy high prices and Mad Max style gasoline wars. So oil was, and especially after the Arab Spring, when it looked like the whole Middle East and North Africa was about to get disrupted and all of the supply was about to go out, the prices went to the moon. Then you have the technology reality sets in, which for the internet was, okay, this is a game changer, but it's going to take a lot longer than expected. For oil, it was like, whoa, shale is real and it's here now and it's going to crush OPEC. And in both cases, there was like a market crash in the subsector where the technology was creating the disruption. I think we're sort of entering a similar phase for AI, where infrastructure plays, basically the L1s of AI, which is NVIDIA, OpenAI, some hyperscalers and tech darlings are all mooning. Then we're going to get reality setting in, which I think is going to create a precipitous collapse in, I don't know what parts of the economy. It could be like stocks that rely on it's hard to say, but I feel like we're going to get a mini collapse somewhere, and that's what you're supposed to keep your eye out for in 26, 27. That dip is probably a buy after it's cratered enough and bottomed out, but you don't want to stand in front of that freight train when it's coming. I'm not sure if it's going to hit crypto or not, but it's just too many analogs to ignore this. What do you think?
I can't think that far ahead to make a good prognostication on what would happen there, to be completely honest. But I do think that in any bubble, you'll always get ahead of yourself, right? Like I think just as a general principle, like I can't tell you exactly what will happen or exactly what will collapse or exactly who will be affected by it. But in any bubble, you're gonna get a pop. The thing is, I just don't believe that we're close to a bubble yet. I mean, growth is still going nuts right now, and there's, bubbles pop when there's no more gasoline to pour on the fire. And in a normal market, like a non-government controlled or pushed market, that means that everyone has invested all the money that they possibly can. And there's no more real money being generated. There's no more real value being generated. And then so people just can't push more money into the market. The government is pushing money into the market, right?
Okay.
That's why I think, and until that ends, until that stops, I think we're good.
Okay, so basically at the societal scale, Trump and his new buddy Hassett are gonna basically just pour more gasoline onto the fire until they disappear, or until Trump disappears. Let me ask you a question, because I think AI is the main character of technology markets, and crypto is a technology market, basically. Let me ask you a question about gasoline on the fire in AI. So let me put you into Sam Altman's seat for a moment here, Avi. You're the CEO of OpenAI. Google is now gone from like total joke, laggard, black George Washington, black female George Washington to like utterly crushing you, right? Do you, and your company's unprofitable as fuck, and you're about to get your market share taken away in a big way. Do you continue to spend like the world is about to end in a race to beat Google and Grok to achieve AGI, or do you just like capitulate that race and try to become profitable somehow?
Never. No, you never capitulate that race, because that is that's the whole thing, right? Like basically it's like a video game where you're running along a path and you're trying to collect as many coins as you possibly can, but the reality is like you only win when you get to the end and you beat Bowser. Right? Like that's when you win. Like you can collect as many coins as you want along the way, but you're only winning when you tackle AGI. Like that's it. So I don't think that they will ever give up on that, because the reality is OpenAI was started as a research nonprofit, right? I think some of that ethos is probably still there, in that they didn't set out to build consumer applications. They ended up building consumer applications because they thought that it would become extremely profitable for them, or it would become good, or it was a way to disseminate and raise value and make, get attention, and whatever reason that they built this consumer app for themselves. The end goal is that, hey, we want to build AGI, and by all accounts, they might still be closest to it. I don't know, right? Like I don't know if they're far, if they ever end up far behind Google. I know they're far behind Google from a consumer application standpoint, but yeah.
Okay, so given your response to that question, I draw the following conclusion. Gasoline is going to get poured on the macro fire by Trump and company. Gasoline is going to get poured on the AI fire because of the incentive structure that you just elucidated.
Correct.
With Sam. So it's like, if you're Dario at Anthropic, if you're Sam at OpenAI, if you're Sundar, Jensen, whoever, it's just, you're going to find all the gasoline. You're going to locate every last drop of gasoline and you're going to
pour it on the fire. And that's just, and that's just how it's going to go, Jonah. And so we're about to,
how could anyone be bearish in this environment in the short to medium term?
I think that the only reason to be bearish is that people are really skittish. And so you can get these sell-offs because people's conviction is, the market has low conviction in whether this is a bubble or not. And so when things start to look shaky, everyone takes the mentality of it's better, what is it? What's the quote? You can be first. You can be smarter than everybody else, or you can be first. And everyone wants to be first, right?
Yeah. I mean, basically that's our edge in this market, is conviction. Like, I try to analyze what edge I have when I trade. And basically where I'm at right now is I'm not going to beat Citadel and Renaissance Technologies, DE Shaw and 2 Sigma at picking short-term tops or bottoms. Although that volume signal you brought up is really exciting. I'm gonna win because I have higher conviction. I have more commodities experience than people in these other markets. And I can ride a mega trend more efficiently than somebody that has to report daily P&L to a risk manager.
100%. The daily reporting is really where basically anyone that's watching this podcast, if you're not a professional money manager, your biggest edge is your time preference. Like your ability to win over long periods of time makes it so much easier for you to make money than a professional money manager that is dealing with the stress of their monthly, quarterly, yearly result. It just, you as a money manager, you have to sit there and unfortunately I went through this as I was managing, billions of dollars at some point in my career. And now I sit on podcasts and talk to Jonah because it's a lot more fun and less stressful. it's it's really, it sucks because like you're like from a business standpoint, like it makes sense to try to find things that are going to win in the next 3 to 6 months and like to keep doing that, even if you end up over time underperforming, because you can justify yourself to your investors that you are doing something that they couldn't do. And I think that's like that's a lot of the business. And to be fair, when we were running capital, like we were doing things that they couldn't do. We were finding things, and we made a ton of money and beat Bitcoin for 8 quarters straight. So I'm very proud of that. But I'm also very cognizant of the pressure. So I think that's the biggest description.
You were forged in the foundry at extreme temperatures, Avi. And look at you now.
And look at me now. And look at me now. I'm debating. Hey, if this is the bottom, are we supposed to be buying meme coins again?
Coins.
Like are meme coins going to be the fastest off the bottom? It's honestly about like a fart coin. Like is fart coin going to double from here before it dies? Just because people are. There is a mentality here, which I'll leave you with this thought. There's a mentality here that happens after large sell-offs, which is people have lost a lot of money. Obviously, people are down a ton. And you have this mental block. You're like, well, I want to get back to my high water mark as fast as possible. And so therefore I'm going to shove my money into what I view as the high. I think this is a bottom. And so the best way to make money in a bottom is to buy the highest risk shit. And the highest risk shit is your fart coin and your SPX 900 and like all this other like absolute dog shit that probably isn't going to exist in 3 years. But in the next like 10 days, might be the best performer because of that specific mentality.
Yeah, no, I like that. So, okay, couple of thoughts.
You know what else might be a good performer, Jonah? That our ThousandX token is going back up because we relaunched the terminal.
So that's what I wanted to talk about. A couple of things. First is very quickly. I know that some podcasters, like we have a ThousandX feed on YouTube, on Spotify, Apple Podcasts, etc. Some podcasters they add more content in between the weekly pods. One thing we could do in the future is we could just make what I love about this pod is that I actually learn stuff and then I go trade based on my learnings about process and markets just from talking to you, kind of like what we did before we started the pod when we would just talk while I was at Cumberland and you were at Golden Tree. And basically we could turn this into a markets call. We could literally just we could have other people talking about other markets on like a Thursday or something on our stream and just have more asset price conversations between two or maybe 3 traders and just add it to the content that we serve out. That would be interesting.
Yeah, I think that would be very fun.
It's something we should explore, just as a thought. And then the other thing, we launched our ThousandX terminal because I'm going to share my screen here. Basically, we've constantly been getting this question from our users, like, "Hey, when's the next pod? Hey, can you talk about this thing?" And Avi, you and I are a little bit lazy or busy. Like sometimes we don't have time to hop on the phone on a Saturday night because some random thing tanked the market. So our listeners want to think through markets the way that we do. And that's why we built this terminal to kind of assist the listeners in monitoring markets and analyzing them and interpreting them and synthesizing the information the way that you do on this pod and I do on this pod with each other. So basically you have a dashboard here in the terminal, which is a feed of news, AI generated research, and a few select podcast summaries. The feed is an aggregated feed where you could have everything: news, research, podcasts, and whatever else, market data. You can click into each of these things and read the news. Zora, okay, maybe I care about that, maybe I don't. This one's about technical analysis, I don't care. But I could still ask it, what does this mean for my bags? And talk to the news article, talk to the research, talk to the podcast transcript, and receive a response in Avi, you're in my voices, right?
Yeah,
And
my,
so,
my,
like,
my specifically my favorite thing is talking to podcast transcripts. I think it's just like I don't want to like necessarily listen
yeah,
to an hour long podcast on something like highly technical. So maybe I just ask it questions, like ask the podcast, like, oh, if you have specific thoughts, get in there, ask it whatever you want. It's pretty good about it. It's pretty.
That's
good.
what I did here. So like,
Yeah.
I listened to a few podcasts and, beginning to end religiously. I listened to this podcast because I think it's important for podcasters to just, listen and review themselves. I listened to the All In podcast because I think they have some great guests. And it takes on sectors that I care about, even though they're kind of unbearable humans for the most part, except for David Friedberg. He's pretty awesome. I listened to a few other podcasts as well, Barry Weiss's stuff, but like, I'm not going to listen to light speed because I'm not a Solana maximalist or enthusiast enough to listen to the whole thing, but I do care about a lot of the things on there. Like, for example, just in the terminal here, and I use this terminal to prepare for the podcast. So do you, Avi. Like, this is now our go-to research tool. Basically, somebody did the Jito end game, a guy named Lucas Bruder. Don't know who he is. I'm not going to listen to him for an hour. But I get the transcript here. Too lazy to read that. Basically, I know that Jito does huge buybacks like Hyperliquid, but their token has really underperformed, and I don't understand why the market's not rewarding them for their token buyback. So I just asked the podcast in the ThousandX terminal, talk to me about Jito buybacks and why the market isn't rewarding JTO as much as it rewards Hype for its buybacks. And basically, I got a response, basically in your voice, Avi. Here's why the market isn't pricing it like a catalyst the way it does for other tokens. The buyback math looks weaker on paper, blah, blah, blah. The real tokenomics overhang, I hadn't thought about that. It's basically a faster way to, Solana is getting crushed. Basically, like staking, I'm not going to waste everybody's time reading the response, but like it's a better way to synthesize information than going and compiling all of those different things together myself. It's basically a way of talking to this Lucas Broder Jito expert guy to help me understand why Jito isn't getting rewarded for its buybacks the way that Hyperliquid or maybe Aster.
What I really like the terminal for is like bringing in data, right? It's like, okay, if I use it mostly for the chat functionality where I just like ask it about shit. And
it's linked to derivatives data.
I ask it to bring in data and just pull in numbers for me, and it does it way better than ChatGPT. So anyway, basically, we're out here shilling the terminal to you because I actually genuinely like we built this to help you. We built this to help ourselves. We also built it to help you. We did it because we wanted something like this, and then we were like, oh, I think other people might like this too. And so, definitely give it a whirl. We would love anyone that, if you're listening, we'd love your feedback on it.
ThousandX.money.
We are super responsive to this kind of stuff. So if you have any ideas or thoughts like where the product should go or like how to improve it, you can have a stake in it. And then also there's obviously basically all the revenue that we generate from this is just going straight back to buy the ThousandX token. So that's kind of fun.
Yeah. Obviously this isn't a recommendation that you buy the ThousandX token.
No.
Obviously, if you do, just be prepared to lose all your money because tokens are stupid and nothing we say is investment advice. But at the same time, like we built this for ourselves and for our listeners, and we want feedback. We'll go on any podcast to talk about it, unless you're a jerk, and then we won't. But for the most part, it would be great to get feedback, and we're looking to actively connect this thing to more APIs, make it better, and make it just everybody's go-to kind of research tool for crypto, and have it respond to you in a Jonah and Avi trader way, as opposed to just like a neutered Sam Altman ChatGPT way.
100%, guys. I mean, this was fun.
It's great.
This is good.
Great talking to you, Avi.
This was great talking to you too, man. Fun stream. We went for more than an hour this time.
This format's better for us. Thank you to everybody who tuned in. We love streaming with you guys in the comments, and keep doing it. See you next week, Avi.
Adios. Take care.
Adios. Nothing said on the ThousandX podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.